Now, hello guys, this is Soji and welcome to Soji Forex. In this video, I want to continue from our previous video where we talked about mastering candlestick pattern in Forex. In this video, I want to look at candlestick entry strategy. Candlestick entry strategy. In our previous video, we highlight the various types of candlesticks and how we can use them at various points on our trade. So looking at my chart, now we are going to look at this in two ways. First, using an indicator for the analysis, and secondly, using our trend line, which means a pure price action. So let's go with, this is our indicator, and we'll be using this indicator to determine the trend of the market. So on the main chart is our Bollinger Band, and the blue line is our EMA 50, while the up one is our upper Bollinger Band, middle Bollinger Band, and our lower Bollinger Band. So looking at this structurally, you agree with me that market is a downtrend. Why? Because we are having a series of lower high, and lower low, lower low. So having this series of lower high, lower low, lower high, lower low, lower high, lower low, established that we are in a downtrend. And then secondly, using our moving average, whenever price crosses and close below the 50 EMA, we establish that it's in a downtrend. And another more confirmation is when it closes below our middle line of the Bollinger Band. And when we have such, we conclude that we are in a downtrend. So looking at this scenario, we are in a downtrend because we have a high, and then price eventually closes below our 50 EMA, which is what we are seeing. Now, how do we establish this? Remember, we begin by identifying the structure, the trend of the market. So we are in a downtrend. This is H4. So any trade we will be taking should be a sell entry. We are not buying because of the trend. So now we proceed. How do we now make our entry? Remember, after establishing the trend, the next condition you wait for is a pullback. Pullback to the zone, the area of your moving average, either the lower Bollinger Band or the 50 moving average. In this case, the market closes below the 50 moving average and pull back inside the 50 moving average. So we are not treating the moving average as a line, we are treating it as a zone. All right, so when it pulls back, we are looking for a particular candlestick formation. So here is our candlesticks, and we want to look at one of these formations should have formed before this market begin to reverse. It can be a hammer, it can be a hanging man. So let's go and confirm. Okay, now, and then looking at our chart, we have this candlestick pattern, and the candlestick pattern we are having is a hanging man. And because this pullback is into the zone of our moving average, we know this is a zone of reversal, and so this our hanging man is a bearish reversal pattern. Let's confirm it from our candlestick. And then here we are, this is a hanging man. So you will agree with me that what we have there is what we have in this box. You can see that is a hanging man, and this hanging man is a bearish reversal candlestick pattern. So we found this hanging man, and then you see how the market reversed. And after the market came back for a while, the market pulls back again. And when it pulls back, this time around, it pulls back into the moving average. So remember, we said first you know your structure, and after your structure, you now know where to look for your pullback. And after this pullback, the price is here, and we have another candlestick pattern that is being formed here. And what is the candlestick pattern that is formed here? Let's confirm. So the candlestick pattern formed on our chart is an evening star. So let's look for our evening star, which is among double candlestick pattern. Okay, and here you can see that is a form of a doji that is formed in this place, and it's a bearish reversal candlestick pattern. So now look at it. This is an evening star. So like the color doesn't matter, the most important thing is the formation. Just understand that an evening star is with a body at the center with a weak rejection on both sides. So are we going to make our entry immediately after we spot this? No. We'll wait for this follow-up candle. You see another one, another evening star, double confirmation. Then we'll wait for this particular candle. After this, we'll make our entry. So which means that our entry is after the close of this candle, and then we have our stop loss. And then we proceed, and you see again after this incident the price pulled back another time into the moving average, and here is giving us another candlestick pattern. You can see we have a hanging man, we have an evening star formation, and this is double entry. And immediately we get this move to the downside, we now make our entry at the close. We make our entry there and have our stop loss here and our TP somewhere here. So this thing is pretty much simple. This is how to make entry. In this case, you see it come back. When it pulls back into the zone, that is when you look for the candlestick pattern. You can narrow it down to a lower time frame, because remember we are in a downtrend. Okay, and here in our H1 time frame, you see that price came down, and look at what happened here. The same thing we are talking about plays out in this zone. Okay, this is we still want to see price cross below our moving average, which it did, giving us a downtrend. And on H1, the Bollinger Band middle line was crossed as well, and then price pulled all the way back into this zone, giving us a hanging man, giving us an evening star, and then we see this bearish signal. That will make our entry here. Our stop loss is above. That is entry number 1. Again, for the second time, price pulls back into this zone all the way here. Remember, we know that from our higher time frame, the H4, it is a sell market, so we are not looking for opportunity to buy. So price pulled back again into this zone and gave us, look at this candlestick pattern, it gave us an engulfing, a Haramic candlestick pattern, and then from there you see the move to the downside. So this thing is very simple and sweet. Here again, price came back, pull back, give us this candlestick pattern, we make our entry. The same thing is applicable. Price pulled back here, gave us bearish engulfing, and then we move to the downside. And you can see this, it keeps playing out on and on and on. Now let's look at it on a naked chart. Now this is our naked chart. And then on this naked chart, we assume that we are trading pure price action and we are not using indicator for our analysis. So what do? We open the chart and we begin our analysis by saying we have a high and we have a low. And we say market did a lower high and a lower low. It did a lower high and a lower low. So we have established that we are in a downtrend. So having established the trend, what is the next thing to do? You can choose to join this point and this one with your trend line. You can choose to join this level because this is the first level that is being formed. Okay? And after this particular formation, you can choose to put your trend line. Knowing that it's a downtrend, you are not longer expecting the market to break this trend line to the upside. You are expecting the market to play around it and then return back inside. So if you are to exit any trade that will break this trend line, for you to exit it must come this way. It means that this candlestick will have to break. The first candle will break. That the first candle break is not enough for you to exit. You can look at our candle by candle analysis. Then you need a follow-up candle, which is the second candlestick that you are seeing now. Okay, it is at the close of this follow-up candle which shows you that, okay, this is not just a liquidity sweep. It is already breaking. You now exit the market. Otherwise, you remain. Okay, so now we have this form already. So what next do? We now mark out our range. We say we have this, and then we have this. So this is our range, our high and our low. So we want to determine where to enter at 20. So we now pick our RSI, place it on our week to week. And that is it. We are now waiting for the trade to play out. And what do we do next? You see that price came back, pulled back into the zone of 61.8. The zone of 61.8. When it put to this level, in that zone, it gave us a hanging man candlestick pattern, followed by this bearish candle. Okay, you'll see that price pulled back. It pulls back to 61.8 level of our Fibonacci level. This is our Fib. Price pulled back to that region, gave us a hanging man. And afterward, we have this follow-up of a bearish engulfing candle. We make our entry. Our TP is always at the previous lower low, which is this place. Our TP is here. This zone is our TP. Okay, and here is our entry is on this point. We have our stop loss at this high. And then the price, you can see how it plays out. So immediately this has finished playing out. The next thing you need to do is for you again to adjust. You adjust your trend line. You now have a new range. So what is our new range? This is our new range, because this is the new low that was formed. So you now adjust your Fibonacci level. You place it on the new low formation. And this new low formation. So now we want to get the precise low. Okay, this is our new low formation, and that is our high. And here is our new low formation. So afterwards, we see our price movement. And what's our price movement? We now saw how price came back, pulled back from here, and reached the level of 78.5 of our Fibonacci level. And from this zone, it gave us an evening star pattern. And then it reverses from there afterwards to the downside. And after that particular one, we now have another new low which was formed. And here is the new low. Remember, our Fibonacci is on week to week. And if you are using body, you have to be consistent. You use the body to body. So this is our new range. So we'll pick our Fibonacci level now and fib this particular high to this high, the high to this low, and look at what happened. Price pulled back again to the area of the trend line at 61.8. We have a hanging man, an evening star, which gave us another sell entry to the downside. So this is how these entries are. Very simple, very understandable. All you need to know is for you to determine the trend, you wait for a pullback because you already know the direction of the market. And this, the same way we reproduce it on 1 hour, you can reproduce it on any of the time frame. And I believe you are getting value from this video. Please do not forget to like, to share, subscribe to the channel, turn on the notification bell so you'll be the next to get notified whenever we publish our new video. See you in the subsequent video.